So the economy is changing, and the economy is changing very rapidly. And I hope that the community is preparing. What's going on, you guys? Economic Prepper here. I do hope that you guys are doing well. I hope that your families are preparing and are doing very well. You're getting ready for whatever economic collapse or economic event may head our way. Now, please don't mind me having a little bit of lunch here. Brown rice, asparagus, and grilled chicken fresh off the grill. It's a beautiful day outside. Hope you guys are enjoying some of this nice weather before it gets cold. And speaking of the cold, we are expecting a very cold winter. So I hope everyone's stockpiling wood. You're preparing for elevated fuel prices, natural gas, and with the conflict going on in Ukraine right now, which is ultimately likely to affect Europe regarding their ability to have the gas that they need to heat their homes. This is going to directly or indirectly affect us here in the United States, because if you guys haven't noticed the pattern, which I'm pretty sure you have noticed the pattern, the United States generally will be the stopgap to fill the needs of whatever countries need help. And more than likely, Europe is going to need help, at least from a fuel standpoint. So if Russia's not going to provide Europe with the fuel that they need, I should say the gas that they need to heat their homes, I don't think that the Biden administration is just going to let them freeze to death over there. We're going to likely provide some type of additional gas, fuel, whatever resources they need to prepare for this coming winter. So that's going to obviously affect our gas prices. It's going to affect our fuel prices. It's going to affect the supply chain, the supply availability of fuel. But that's not what I'm here to talk to you guys about. We got some big changes coming up here. Beyond Meat suspended operating chief after arrest of allegedly biting a man's nose. And this is kind of crazy. So Beyond Meat's operating chief, Doug Ramsey, he was arrested on Saturday evening for allegedly punching another man and biting his nose. Wow. Beyond Meat. Do you guys eat Beyond Meat? I know we got a lot of people prepping and preparing, canning meat and so forth, but Beyond Meat is an alternative to the traditional. You guys let me know if you like Beyond Meat, if you've ever tried Beyond Meat, or would you recommend that you stay away from Beyond Meat? You guys let me know in the comments down below. I haven't personally tried it myself. So Doug Ramsey, not to be confused with Dave Ramsey. So Doug Ramsey, 53 years old, has been Beyond Meat's chief operating officer since December. Looks like he was charged with terroristic threatening and third-degree battery. Well, I assume if you bite somebody's nose, that probably would count as some degree of battery. So it says here, but Beyond Meat said its operating chief, Doug Ramsey, has been suspended effective immediately after he was arrested on Saturday evening for allegedly punching a man and biting his nose. Hopefully he didn't bite the nose off. Can you imagine that? Ugh. So company said on a statement on Tuesday afternoon that Jonathan Nelson, the company's senior vice president of manufacturing operations, will oversee Beyond Meat's operations activities on an interim basis. So I wonder what Beyond Meat's stock price is looking like. And you've also got, beyond Meat, you've got other companies that Mr. Ramsey has previously worked at, Tyson Foods, overseeing poultry and McDonald's businesses. Looks like Beyond Meat was relying on his experience to help the company successfully pull off big launches, particularly with fast food companies like Taco Bell owner Yum Brands and McDonald's. So more details will likely unfold about that. But, here we go. It's another odd story affecting our food chain, our food supply chain to some extent. Obviously, he's an operating officer, so I would say that this is, not a direct impact, but still within the realm of food. Funny how that keeps coming up. So I want you guys to pay very, very close attention. So right now, the Dow Jones is sitting right at 30,706. The stock market just closed for the day, down another 313 points, which is just crazy. S&P 500 is at 38,000 or 3855 for the day, which is also down 43 points. So it's a 1% drop. NASDAQ is down 109 points. So we're at this critical point here in our economy, in our stock market. And we're approaching a very critical support level. And if we breach this support level, we could potentially see a more aggressive downward pressure on the stock market, potentially a stock market crash. But even more importantly than that, the Fed is expected to raise interest rates by 0.75 of a point again. But even more important than Fed Chair Jerome Powell's meeting, which is coming up, and this expected or anticipated rate hike that's coming up, it's what does this mean? Obviously, this means more pressure, really pressure on the housing market, more pressure for mortgage companies and banks. Like, this will make mortgage companies and banks' bottom line really be negatively impacted. Very likely, I should say that at the least. And the reason I say that is because the higher these interest rates go, the more expensive housing becomes for a housing buyer or for a home buyer. So it's driving away any type of mortgage applicant that might be interested in buying a home. And well, guess what? If people aren't buying mortgages, if people aren't buying homes and applying for mortgages, well, that's a significant portion of a bank revenue. That's a significant portion of a mortgage company's revenue. So, the Fed is not just affecting prices. The Fed is not just affecting the cost of lending, but it's affecting business operations and companies that depend on the availability of liquidity, the availability of capital, the availability of being able to walk into a bank or any type of lending institution, lending establishment to apply for credit, obtain a loan, and be able to buy something. So this is getting really interesting. But what does this 0.25 point rate hike mean? And the Fed is expected to fire off yet another 0.75 point rate hike. It's third in a row. And there's a date that I want you guys to pay attention to, and it's tomorrow. It's tomorrow at 2 p.m. Eastern time. So set your calendars. I want you guys to pay attention to what the Fed's about to talk about. So the Fed's projections they're pretty much always important. They're pretty much the big decision makers, even more potentially more important than the presidents, because the Fed, they act independently from any administration that's in office. I don't care if it's a Trump administration, Biden administration, Clinton, Bush administration, doesn't matter. The Fed is, they operate independently. But this time, they're even more so because investors are trying to game how high will they raise interest rates going into the future. So Fed Chair Jerome Powell, they're speaking at 2:30 p.m. Eastern time tomorrow, and he's expected to emphasize the central bank will do what it takes to fight inflation, and it's unlikely to reverse its hikes anytime soon. And so let's put this into perspective here. The Fed's been lifting rates for roughly 7 months, and we're now moving to its target rate, which is above what they had been considering the neutral zone when inflation was low. So neutral is considered to be the interest rate level where the Fed policy is no longer easy, but yet not restrictive. Now, the Fed has considered 2.5% to be neutral, but if it raises it by 0.75 of a point, the Fed funds rate will be in the range of 3 to 3.25 percentage points. So this is getting really aggressive here. We're going to see more labor market pain. We're already seeing labor market shortages. It's very difficult for employers to find employees who want to take these positions. And unless suddenly employers are able or willing and able to pay employees a lot more money than what they're offering, most employees realize that the market's still strong enough for them to kind of walk and go to a higher paying employer. Now, of course, it depends on your labor market. Some labor markets are stronger than others, and it also depends on what type of role that you're applying for. So there is that. Now, I definitely wanted to touch on a comment that came in on one of the previous videos. This one came from Darnell James. He said he wanted to upgrade into a home with more land, but he decided to stay in his current home because of the high interest rate and the cost of the home itself. This is a double whammy: high interest rates and also inflated asset values, asset prices. Real estate's, probably up a good 30 to 40% in most real estate housing markets. But he said he'll wait for the housing market to crash before I decide to upgrade. He said, I'm not willing to give my bank money for higher interest rates and mortgage payments. Thanks for keeping us informed. Well, Daryl, thank you so much for your comment. And this is an interesting situation. So let's open this up here a little bit. So Daryl, he said he wanted to upgrade his home. So here you have and we got to remember that the economy is made up of economic participants. I'm an economic participant. I'm economic prepper, but I'm also an economic participant. And anyone who has money, spends money, is owed money, earns money, is a economic participant. So if you have a job, you're an economic participant. If you have a small business, whether it's a drop shipping business, online business, if you're a 1099 contractor, if you work for Walmart, if you work for Costco, whether or not you're a low-level employee, you're a CEO of Bed Bath & Beyond, ticker symbol bbby, which, by the way, steadily crashing. We're all market participants. We're all economic participants. And the decisions we make with our money, whether it's to spend money, save money, invest money, hoard money, stockpile cash, pay down debt, these decisions we make impact the market. They impact the economy. They impact the results that the Fed is looking at. They impact the reports. Like every move that we make collectively ends up on a report that the Federal Reserve and other economic entities look at to review the direction of the economy. So when people like Daryl, not to pick on you, Daryl, but when people like Daryl decide, hey, I don't want to buy a home at this price, nor do I want to buy a home at the available interest rates. So now what does this do? This creates a ripple effect. This is one less sale that will transpire in our economy. This is one less transaction that will pay a real estate agent, actually probably two real estate agents. So two real estate agents are now impacted by Daryl's decision not to buy a house. So likely there's a listing agent that would put a house on the market for sale. There's also generally a buyer's agent that represents the buyer. Obviously, there's some scenarios where, neither a buyer's agent or a seller's real estate agent is present, but in most cases there are. So that means that a buyer's agent and a seller's agent are not able to earn a commission off of the sale of whatever house that Daryl may have purchased in the future. So that affects two people. This lack of a transaction affects whatever attorney's office that performed the title search that would have been required in order for this transaction to take place. So, however many people work in the attorney's office, that's additional revenue that's not coming in. The appraisal that would have likely taken place in order to determine the value needed for the bank to be able to underwrite the loan won't happen because Daryl doesn't want to purchase a home. So this is one less deal. This is one less amount of revenue generated by the appraisal in his small business, his or her small business, that won't happen. So I'm just giving you guys a little bit of a snapshot of the cascading effect when one person decides to do something or not to do something. And this is one person. We have 330 million people in the United States. Now, obviously, some of them are kids and some of them are just, but the point is there's a lot of individuals that are participating in our economy, and each of their decisions collectively impact everyone and everything. And we're seeing more and more of this. And ATX1 actually responded very creatively. I don't see people talking about this too much. ATX1 said you can always buy points, 1% of the size of the loan, then roll that back into the loan. Get that 6% down to 3% and play their game. You know what? That is actually something that I haven't looked at for a long time. So ATX1, props to you, my friend. I'm going to give you a thumbs up on that one, because I think that is a very smart thing to do, especially for people who, even if they don't want to buy in this market, they may have to buy in this market, depending upon your circumstance. Maybe you need to buy a house. You're being forced out of your rental property. In fact, speaking of rental properties, some of these real estate investors are really jumping up on they're raising their rent prices quite aggressively. Jen, 5 hours ago, said that her son's rent went up from $1,425 a month to $2,385 a month at once. It was a crappy apartment with mold, no parking, and his cat converter was stolen in broad daylight. So I don't know if you guys are aware, there at one point was this huge slew of people, or this awful act of people getting up under other people's cars and stealing their catalytic converters. And I don't remember why they were doing it, but I know I had seen it a lot in the news, and it was catching a lot of social media sites and people talking about it. But this is crazy. Her son's rent went up almost $1,000 all at once. And so this could be a situation where, hey, you're not in the market to buy a house, but if your rent goes up $1,000 and then you look around and you're like, hey, all other rents, even if you moved from that particular apartment or rental property where you might have been staying, if you find that all rent, the market rent, has gone up $1,000, well, you have no choice but to pay $1,000 more per month, every single month, for a rental property. But this may push some people into a situation where they wanted to wait for the housing market to crash, but they're forced to, I won't say you're forced, because you always have a decision. You always have a choice. But you may end up being enticed to jump out into the housing market, purchase at today's prices, purchase at today's interest rates, because you say to yourself, you know what? I would rather not spend an extra $1,000 per month when I can spend that same amount of money on a house that you can own and actually pay down, build equity, build wealth over time, hopefully, future asset appreciation. So, and it sounds like Darnell was in the position to buy a house, but with the increase of mortgage rates and the increase in housing prices, Darnell decided to sit out the market. So if you're in a situation where you're just sitting out waiting for this housing market to crash and you had a down payment available, but then all of a sudden your rent, your landlord hits you with a letter saying, hey, your rent's going to go up $1,000 a month starting 3 months from now. Now, all of a sudden you're on the housing market looking for a house, even with higher real estate prices, even with higher mortgage rates. And if we continue to see this, we may actually see potentially the next leg upward in terms of mortgage, or in terms of the housing market demand. That remains to be seen. Now, the flip side to it is, if people say, you know what, it's still not worth it, and people decide to continue to rent, well, that's driving up rent prices too. But ATX1 says you can always buy points. And almost forgot about this. You can buy points. So okay, today with a prime credit rating, you might get offered on a 30-year fixed rate mortgage 6.08%. I think that's what I saw the average today. So you might get, let's just call it 6%. So you could get a 6% interest rate, but if you buy down your points, you could technically walk away with a 5% loan. If you buy down buy it down by 1 percentage point, or if you buy it down by 2 percentage points, you might be able to get a 4% 30-year fixed rate mortgage. I mean, why not buy it down 3 percentage points? And like ATX1 says, get that 6% down to 3%, and now you're good. Potentially, right? So that's an option. Now, another option is, because buying points is not free. It's not cheap either. And I don't know what the rate is per bank right now for buying down points. I didn't look into it before looking at this comment, but you could technically also, it's a gamble, because Darnell says he wants to wait for the housing market to crash. Well, the gamble is you're expecting the housing market to crash. You're expecting lower housing prices going forward. But what you don't know is if the housing market crash happens, and then we also don't know if it does happen, how much housing prices would go down. What if housing prices go up? Right? So there's another risk. What if housing prices go down, but interest rates keep going higher? So now the cost to borrow increases and it offsets the discount you might have received from declining housing prices. So there's a lot of different factors and variables you want to consider. And so, another alternative, and of course, none of this is financial advice. We're just having a conversation here. But another thing to consider would be, well, what if you think that the Fed is going to pivot in the future, maybe in the next year, maybe in the next 24 months. So maybe you say to yourself, hey, you know what? I think the Fed's going to pivot. I'm going to lock in this price because I think the Fed is going to pivot. They're going to lower their interest rates sometime in the next 24 months. I'm going to buy real estate. I'm going to buy the house we want right now today at the current price because I don't think that the housing market is going to go down below the current price point to any, meaningful amount. So maybe you say, okay, I'm going to buy today at 6%. 30-year fixed rate mortgage. Then within the next 2 years, if the Fed does lower their interest rate, you can always refinance your mortgage. And let's say it drops down to 3%. Now you've avoided having to pay points to get 3%. If the going rate 24 months from now ends up being 3% for a 30-year fixed rate mortgage. Granted, if you waited 24 months, you paid 24 months worth of, at the 6% interest rate. But, hey, it's the cost of doing business. But these are things that home buyers, real estate investors, and sellers are considering because most sellers end up buying another house. So everyone's thinking about these things. Also, I wanted to briefly talk about pawn shops, very, very briefly. I saw a number of different publications talking about people selling items at the pawn shops, and the business for pawn shops has been going up. But I've talked to a number of different pawn shop owners, and they're seeing a variety of people coming in there. And some people are actually selling things that they don't need to sell because they're preemptively preparing for what they believe is coming. So just because someone sells something at a pawn shop doesn't mean that they necessarily are desperate for cash. Some people are, but not everyone. Anyway, I just want to share that quickly with you. I got a lot more to share with you on that subject and on other topics, but I got to leave it right here. My food's getting cold. Thank you guys for checking out the video. Drop a like if you made it this far. Consider subscribing to the channel. And you guys be safe out there. Be safe.